It's May, and we have another real estate market update for you for the city of Austin. If you haven't joined us before, I'm David Shapiro with my colleague Lee Abraham. We run the Shapiro Group here in Austin, Texas, a local real estate team. So if you have any questions about buying or selling here in the area, please reach out. We'd be happy to chat about your goals and see if we can be of help. But what we do here on this channel is we talk about the market and go over the stats and show you what's actually happening in the market with real statistics. Remember, you can always find us back here at the realestatevideohub.com, and that's our YouTube channel, Living and Thriving in Austin, Texas. And let's dive into the stats. So here we go. We've got the number of active listings, and as you can see, as we've talked about in previous videos, they are on the rise as we enter the selling season, as people have been conditioned to start listing their properties in the spring and early summer. And so that's happening. More listings coming live as we anticipated. You can see the normal seasonality.
So the interesting thing, David, the number of active listings is up, but the actual monthly housing inventory is down a little bit. And so we take a look at 3,047 active listings. Wow, look at the 30-day pending number. That's the first time we've had a comma in that stat in quite some time. So over 1,000 pending sales over the past 30 days. When that translates into the number of active listings, you're under a 3-month housing inventory, 2.9. So
Wow.
The 1,048 pending, much more robust than what we've seen, even going back to the yearly average, the 3-month average in the past 1 month of closed sales, where there was just over 800 closed sales.
Some level of equilibrium here maybe being reached, enough years low sales and people being like, all right, I gotta finally buy something and move. So yeah, normally, let's see, we're here in May. If we go back to last May, wow, it really jumped up from May. Was this May here? It's hard to tell on this chart, but it should be jumping up here soon with normal seasonality. Right. And so far it's holding pretty strong. So it's very interesting to see what happens next month as the supply increases. Will the demand keep up with it?
Right. Yeah. Next month's numbers will really tell on that particular stat.
So here we go. Number of sales per month. So it's up year over year. So if we go back, do we have 10 years? Yeah. So we're in May. So if we go back to 2020, obviously it was a weird period, but normally we were looking at about 1,300 homes being sold per month in the month of May. And still anemic here at 800, well below that. And kind of been the story. I mean, what's 500 over 1,300? So we're like 38, almost 40% below where we should be in the number of sales. So that's really what the story has been for, wow, it's crazy to think this is year 5 of this, of these low sales numbers. Going back, here we go. Well, yeah, 2021, interestingly, had low sales numbers because there was such limited inventory. It was a different issue back then, right? Because if you look at 2019, 1,300 sales versus 1,150 in 2021. And that's why we had so many multiple offer situations.
Look at this number of sales per month. There's obviously different dynamics impacting it, but the number of pending sales is way up, David. And so we'll see how that translates going forward into monthly housing inventory. But next month's stats will be very informative on how we not only finish up the second quarter, but really start taking a look into the third and fourth quarters. The average sale price down just a bit year over year, incrementally up month over month. And I know that you are fascinated by the correlation to the median price. And I understand that you're prepared with a little presentation here.
I wasn't planning on showing it. I mean, I can show it, but you know, the median and average are moving pretty much in tandem. The one difference was if you were to look back here at 2020, so the 2022 all-time high of 914,000 to what we currently are, I think it was like an 11% difference. If you're to do that same math on the median, it was like a 17% difference. So they're the same story, that we're still down from the all-time high, but it's reflecting greater in the median, which tends to tell me that there's activity at the high end levels that's holding up better. So prices in the luxury market are holding up better is what I'm seeing in those numbers. But, you know, we can look at the median in addition next month, but, you know, that's all. Anything else you wanted to say on it?
No, just looking for this to trend upward a little bit over the next couple months in terms of the average sale price. So we'll see how those numbers come in.
Yeah, still below the April high of 898. If we go back to previous Aprils, you can see how quickly this jumped from pretty crazy from 524 in 2019 to 8 to 98 in 2022. So huge jump. The key is 815 still shows that everybody that bought prior to the pandemic has lots of equity. That's the key there. So if you were somebody that bought during the pandemic in 2022 or 2021, I mean, actually, we're even above the 2021 numbers. So it's really just 2022. Or maybe if you bought in 2024, these are averages. It's like everything's so hyper local. It's the specific property that somebody bought. We've had people that bought in 2024 and they're able to sell at a break even right now. So they're not down.
David, here's one other takeaway from all of this numerology, which was that huge jump that we saw. And so if you could highlight that again, I mean, from what is that, the 20 to 21, the big jump, right? Yeah. And so those don't happen on a regular basis, but there is a possibility, given the pent-up demand that we were talking about with the historic number of closed sales in Austin versus the recent history of anemic sales volume, that if the macros converge with a drop in interest rates and a couple of other macro favorable conditions, I'm still thinking that there's a chance for some significant price appreciation here in the city of Austin for single family homes based on pent up demand and the relative limited supply. So I do think that there's more opportunity than downside, from a forecast standpoint.
Yeah, and if we were charting this, we had an all-time high here, and we've shown some stability here, 4 years hovering in this 813 to 840 price range. That's like a pretty narrow range that prices have been hovering. And so I feel pretty confident that we've built a good base and that prices could go down a little bit more from here, but likely the next move is going to be to the upside. And yeah, if we're already seeing pretty strong pending sales with where interest rates are right now, any sort of move down in interest rates is definitely going to create some demand here, and transaction volume will go up. Of course, it'll pull sellers. The counter of that is like that'll pull sellers off the sideline who are now like, hey, I can go buy the home I've been wanting, or I think I'll get how much I want for the home I'm selling. So it's a dynamic market. It'll be very interesting to see how it plays out. But I agree, what I've talked about on previous calls is the fundamentals of Austin that has made it what it is are still here. So we can go back and watch other videos I've talked about that. All right, moving on to the next stat. We've got days to sell down 23% month over month and up 2% year over year. So kind of seasonally what we would expect, nothing out of the ordinary here. But again, what's crazy is going back to 2022 and seeing 13 days. But if we go back to 2018, 40 days, 2019, 32 days, so that would be a really strong market. Right now at 46 days, we're not that far behind. So I'd say that's relatively healthy. Right. What do you think?
Oh, I totally agree. Okay, number of new listings. So we're down year over year, David. The trend for this year continues to be on the upswing. Again, the potential for a episode of price appreciation remains consistent with this story. Being down year over year for the number of new listings hitting the market kind of conspires with that limited supply. So again, we'll keep an eye on it, but curious. I thought that this might be up a little bit more than it is.
Anything you want to talk about previous years? So here we can see we're at 1,500 new listings, and going back to previous Aprils, 2019 was 1,500, 2018, 1,700. So there is some room for more new listings.
Yeah, for sure.
Sales price to list price ratio, 97.62%, down slightly year over year, up slightly month to month. And just, if we're going back and looking at historic here, you can see 2021, the crazy 111%. But what we were seeing in our really strong, consistently appreciating market previously was right around 99% seemed to be the number. And even I remember 97% in previous years, even prior to 2016, and the market was still pretty stable. 97.62. Where are we trending here?
Well, we've been trending up year to date. This is on the low side of healthy. So, it's okay. It's within the range. It's not a bad number. doesn't reflect the robust price appreciation. So you said it very well. In a market that's experiencing ongoing price appreciation, the sale price list price ratio is about 99%. We haven't necessarily seen that. That's not the current market. The current market is up and down a little bit. And so 97% is reflective of that. So I think we're on point here and looking for that number, this 97, to continue to go up here over the next few months based on what we see so far. But again, we'll report on what the numbers tell us.
And then our listing inventory barometer. So here we were trying to get some more real-time stats. A lot of the numbers are lagging indicators. So this one's as close to a leading indicator as we've found. And what you'll see here is the 100% line. And so any periods where it's below that line, that means that there were more sales than there were new listings. And the periods above, which is the majority of the last several years, that means there's more listings than there are sales happening for that week. And so here you can see the breakdown, the number of new listings by week, the number of pending sales, and what that percentage is, and how many listings were lost or added or lost. Now, what we've had to do since 2022, where expired and withdrawn listings have become a bigger factor, is we had to add those into our equation. Anything you want to talk about here, Lee, before we get to the next visual?
The main thing I wanted to talk about was simply the barometer number itself, the supply-demand coverage ratio. And so I called for a 200% move to where that, looking for that barometer reading on a weekly basis to start moving towards 200. And so you can see for the week of April 5th to the 11th, well, by golly, we hit 200%, and we were over 150% or over on 2 of the weeks. The main thing there is giving us that breathing room, David. So what this is talking about from a forecasting standpoint is it the chicken or the egg? You got to have the listings to sell. You can have all the buyers in the world, but if the listings aren't there, you're not going to have transactions. So by having a spurt where the number of new listings is exceeding the pace of pending sales, it's giving us more inventory to choose from, if you will. And I'd like to see this 150 to 200% supply-demand coverage ratio for next month as well, because that will translate into more sales volume and a variety of other good things that everybody's hoping for.
And so here it is when you take the withdrawn listings into effect, and it looks a lot different, looks a lot more balanced than the previous look at it. And you can see here, the last 5 weeks, it's a little bit of each direction. And then I like
Compare
this
that.
view.
Let's just go back real quick to get granular.
Back to this one?
No, back to the net right there. So you can see in the recent view, there were 2 weeks on this past month where the inventory retracted, right? The 2 little lines under the 0 bar there. If you look back to last year, that didn't happen in April or May or late June. So to me, that's kind of interesting, and we'll see what that translates to. But I just thought that was an interesting deal in the prior year as well, David. You don't see any retractions until you start getting into June, July. So
interesting. All right. Leading indicator here. So we might have a stronger selling season here than previous years.
Right.
And that's kind of what we're seeing in this chart too, right? The number of pending sales is moving up at a rate that we have not seen last year. Doesn't even look like 2 years ago, right? You'd have to go back maybe, I don't know. None of these seem to go as high in the number of pending sales. So it seems to be a good indication. Of course, we talked about this, how the number of new listings was still going to outpace pending sales, but that we thought that this gap was going to be narrower than it had been in previous years. And so far, that is playing out, right? I said maybe it would look something like this. So that gap is narrower. And all of these things are pointing to a stronger market for the Austin real estate market. Again, we're looking at the city of Austin, so keep that in mind, single family detached home. So if you were to be looking at the whole metro and including the suburbs, you go up north to Cedar Park and Round Rock, you go south to Buda, Kyle, those areas, it's a lot different in those suburban markets. And so we're not including those because we don't really go out there. We have teammates that do. And if you're interested in buying or selling in those areas, still connect with us, and we have partners that can help. But when we're looking in the city of Austin, Westlake Hills, Rollingwood, stuff within about 20 minutes of downtown up to, Lake Travis, on the south shores of Lake Travis. That kind of stuff is where we're really looking, and different dynamic than the suburbs, where they can have a production build and add 1,000 homes because there's open land. It's a lot different than what's going on with infill in the areas that we're generally working.
That's a good
All right.
visual.
Mortgage rates. So last time we reported, I think it was 6.48 or so. Is that right? Down slightly to 6.3, but up from it was like 5.98 2 months ago. And so if we can see this settle back down to 6 even, I think that's going to psychologically, if we can get below 6, that's going to mean a lot to buyers.
Yeah, absolutely. It's just good to see the little 52-week range graphic backing down from right to left, where it was, I think on our last report, pretty close to the top, and now it's kind of moving back. So good to see.
Yeah, it was like 6.48. Yeah, maybe somewhere in the middle here. All right, well, so what's the news here for buyers, and what's the news for sellers? What's the takeaway?
For buyers, the news is get out there and start looking. And even if you don't find the perfect home right now, you'll be in tune with the market. What are things listed for? How quickly are they selling? What expectations should you have? Guidance, however, is if you find the property you love, let's move quickly, because what we're seeing, David, is that the quality listings, we've talked about it before, they are selling rather quickly. So there are buyers out there. And if you're one of them and you find the property you love, well, let's get going.
Yeah, they are moving fast. There's not a ton of quality listings. Sometimes when you look at the inventory, it's like, well, it's stale listings that are sitting, not the good ones. And then on the seller side, it looks like more of what we've been saying, which is don't wait to list your property. Inventory is low. Take advantage of that and get your property up listed as soon as possible.
Totally agree.
If you have questions about your hyper-local area, because real estate's hyper-local, right? Not even just the zip code down to your neighborhood, we can take a deeper look and tell you specifically for your property. So reach out to Lee. His info's below. He's a former appraiser, so there is nobody better in the Austin market when it comes to narrowing in on pricing on a home. So I highly suggest you set up a time to chat with him about your home and see if us working with you is a good fit. So thanks for joining us. Go ahead and subscribe if you got something out of this so you get notified for next month. And we look forward to seeing you then.
Thanks, everybody.